This market is very, very interesting. People are super opinionated on where the price of Bitcoin will go, but on the other hand, most people are just standing on the sidelines, right? It's wait and see. A lot of people think that this is simply just a retracement in an overall bull market, that we are simply in our 4-year cycle and that this is the beginning of the 4-year cycle and that we have seen similar kinds of retracements in other 4-year cycles and that from here on we should simply just go up. That's a common opinion most people currently have. I personally think that we are more likely to go down from here than go up from here. And this is based on various indicators. I share a few of them now. The first indicator that's very interesting is how many new short-time traders are getting into the market, as in how many Bitcoin are being held by the short-time traders. That kind of metric tends to go up pretty consistently as long as the bull market continues. So simply search for this, right? Search for short-term holders, STH in Bitcoin, look for a chart. There's maybe one in lookintobitcoin.com. There's another one in checkonchain.com. Check that out. Usually this goes up in a bull market because, of course, the long-term holders tend to take profit and the short-term holders jump on. So we see how the market tends to heat up over time. We haven't seen that metric go up for the last 4 to 8 weeks, roughly. So it flattened out 8 weeks ago. Now it's completely flat. So simply just the slope went down further and further. Now we're completely flat. So there are no new short-term holders getting into the market. This is something we haven't seen in other bull markets. That's something very noteworthy. Another very noteworthy thing is that we are already very largely above the average cost basis of the market. Usually what happens is that the Bitcoin price crashes below the realized price, right? And also below the long-term realized price, long-term holder realized price. Bitcoin crashes below that and then it recovers. And then usually once it recovers, it has pretty constant upwards pressure. However, what we currently see is that the Bitcoin price has already fallen below one of the best moving averages historically. So I've backtested various moving averages. I've run trading simulations of buying and selling Bitcoin based on different backtests, based on different moving averages. And when you check this out, right, when you try to find out what's the best moving average to time the market, is it the 7-day moving average, is it the 30-day, is it the 100-day or the 200-day? When you make that kind of backtest and you check this for the Bitcoin price, you see that historically the 120-day simple moving average worked the best. And currently we are below this. And usually we would not fall below this in a bull market. In other words, the backtest says it might make sense to even short Bitcoin now, to bet on falling prices of Bitcoin. I personally do not bet on falling prices of Bitcoin because I believe that long-term Bitcoin is a great investment, right? If you buy into Bitcoin now and you forget about it for the next 5 years, you should be good, right? There's still continued long-term adoption in Bitcoin. And of course, the tokenomics of Bitcoin are very nice. Bitcoin expands much slower than fiat currency. So of course, measured in fiat, Bitcoin should go up over time. Couple that with more and more holders of Bitcoin, of course, Bitcoin should be doing well. I believe that when you have, say, a 5 to 10 year horizon, that you should get annualized roughly 20% per annum. So that's based on the fiat inflation, which is currently 6.8% per annum. That's how fast US M2 is growing. And that's based on the adoption metric, as in how fast is the number of Bitcoin holders growing that have substantial money in this, that have at least one Bitcoin in their wallet. So when you look at all of those kind of things, long-term, I believe Bitcoin is fine, but short-term, most people are now pretty heavily in profit. And there are not a lot of short-term new holders jumping in. And the price momentum isn't that positive. The price is below the 120-day simple moving average. And so it's very interesting how people are very opinionated about this, right? People think that the 4-year cycle theory, the 4-year cycles have to continue forever. And I don't think so, to be honest. Because when we look at what is actually causing that 4-year cycle, and then there's two potential explanations for this, right? The first explanation is that it's monetary expansion and contraction. It's simply just how the Fed is lowering and raising interest rates. The second, and that's the more common explanation, is the Bitcoin halving. Now, for the first explanation, I think it makes sense to buy something else than Bitcoin. If you expect the interest rates to go down, then why buy Bitcoin? Why not simply just buy long-term government bonds, right? Long-term government bonds are the purest play on interest rates. When interest rates go down, then long-term government bonds get discounted less, the future cash flows get discounted less. Thus, long-term government bonds tend to outperform very well when people anticipate interest rate declines. So why not do that? If you think, however, that the 4-year cycle of Bitcoin is created not by the Fed, but it's actually created by the Bitcoin halving, then I believe you should also think about how this affects declines over time, right? When Bitcoin's inflation was 10% per annum and that then gets cut into 4% per annum, that has quite some impact on the supply versus demand dynamics, at least over the long term, right? At least over the years. But when the Bitcoin supply only moves from 1.6% per annum of additional supply hitting the market to 0.85, which is currently is at, then the delta, right, those 0.85 percentage points delta per year, they don't really move the market that much. It's completely psychological. There's no real rational reason to believe that the halving will have such an impact on the price. And a proof for that is not just the absolute numbers, it's also when we look at Ethereum, for example. Since the Ethereum move from proof of work to proof of stake, the issuance of Ethereum went down. So there's less and less Ethereum hitting the market now. We also have a burning mechanism of Ethereum. And so when Ethereum gets used a lot, Ethereum is even deflationary, as in there's less and less Ethereum floating around. And that should, in theory, increase the Ethereum price. If there had never been this change in Ethereum's tokenomics, there'd be now, I believe, 4 to 5% more Ethereum floating. Still, since that change in tokenomics and since the move to proof of stake, Ethereum underperformed Bitcoin quite consistently. So this tells us that it's not just the tokenomics that dictate everything. And yes, there was the issuance, there was the release of the Bitcoin ETF in the meantime, right? There's demand by the Bitcoin ETF. But even that did not offset how much less Ethereum now gets issued. So the reduction in Ethereum's supply since the merge was larger than the purchases of the Bitcoin ETF relative to Bitcoin supply. So in theory, just when we look at those two effects, right, ETF plus tokenomics change, Ethereum should have outperformed Bitcoin, but it didn't. It underperformed Bitcoin since the merge by roughly 30%, a bit more than that, 35% or so. So it's not just the ETF, it's not just the tokenomics. And now, potentially, right, some people might even take away some money from Bitcoin to get into Ethereum in anticipation of the Ethereum ETF launch. I believe that Ethereum will get its ETF launched very soon, right? We already got the approval. We simply don't yet have the final listing. But that will happen very soon. So soon, people will be able to buy the Ethereum ETF. And some people might now be buying Ethereum because of that. But what has to happen is that we actually see inflows, right? Capital inflows into that Ethereum ETF. I am not yet sure if that's really going to happen. Because even for the Bitcoin ETF, if we just look at the last 3 months roughly, when we look at the Bitcoin ETF, we haven't seen that many inflows. We saw quite a bit in the first few weeks, but if we now look at the Bitcoin ETFs minus the Grayscale Bitcoin Trust outflows, when we look at that net flow, we haven't seen many inflows into the Bitcoin ETF. If we annualize the last 3 months roughly, last 3 months of Bitcoin ETF existence, we annualized how much Bitcoin had actually been purchased through those ETFs net. We come to an annualized number of less than 1% per year. So this is how much impact the Bitcoin ETF has, 1% per year. How much will this really move the price? Not that much. So what does move the price then in Bitcoin, right? If it's not the ETFs, if it's not the tokenomics, what I believe moves the prices most in crypto and especially in Bitcoin is what are the short-term and the long-term holders doing.
This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com, link is down below.
So the reason why there's this very long-term upwards trend in Bitcoin is because of its tokenomics. It's because people park their money in Bitcoin. Bitcoin is really a savings vehicle. You've got the volatility, but actually the volatility is good for you. If you save for the next 10, 20 years, then getting occasional low prices is actually pretty good. It's better than having zero volatility. So for dollar cost averaging, for saving, Bitcoin is ideal. And that's why we see this long-term upwards trend, because we see that the fraction of Bitcoin that's been held by the long-term holders tends to increase over time. So that's the fundamental reason. That's what's driving the Bitcoin price over the very long term. Over the short term, we see how the short-term holders drive the Bitcoin price. And it can just be 10% of all of holders, 10 to 20% of all of holders that decide to buy or sell based on short-term psychology that then make those massive moves of potential bear markets of 70% drops. Right? A 70% drop in the Bitcoin price can happen from only 10% of Bitcoin holders actually selling, simply because a lot of Bitcoin is so illiquid. A lot of Bitcoin is actually not moving in the market. And so that's why relatively little capital movements can generate very pronounced movements in the market cap. So you move only $1 million US in Bitcoin and you can move the market cap by 10 million. And that's why we see those massive ups and downs. That's why we see that much volatility. The less liquid a market is, the more volatility we see. And it's not because people don't believe in Bitcoin anymore after a 50% drop, right? There's still the long-term holders that push up the prices very long-term. It's simply just because Bitcoin is so illiquid and there are still enough traders to cause those massive price swings. So what do we have to look at then? If you want to time the market, we have to look at what are the medium-term holders doing, what are the short-term holders doing, are the short-term holders in losses or in profit, what is the average cost basis of the market in general, right? Currently, the realized price, so the average price that all people have in Bitcoin is at around 30K, 31K to be more precise. So that's a potential floor, right? In case we really drop down from here, 31K could be a pretty cheap price. We could, in theory, and I know this is leaning quite far out, and a lot of people will not believe this, but I believe it is possible that we could, in theory, see even the 20K in Bitcoin. In case there's like an external event, similar to the COVID crash, I believe this could spill over to Bitcoin, and we could potentially even see the 20K. And that's based on the long-term holder cost base. If you look at checkonchain.com and you look at the long-term holder cost base, in every market crash, we went slightly below that long-term holder cost base, and that's currently at 20K. It does grow slightly, and so if we don't crash tomorrow and we crash maybe in half a year, this level goes up, and maybe the bottom will be at 23 or 24K. But that's kind of like the levels that I'm actually looking at if I want to get heavily into Bitcoin. I do make very massive bets on Bitcoin relative to my net worth, and I even take out loans when we are below the realized price. As in, I go to the bank, I take a personal loan worth 1 year of my salary, and then I pay that loan back over the course of 3 years. And I buy very heavily whenever Bitcoin is that low, when it's below the realized price. I did this when Bitcoin was at around 18K. Then I sold quite a bit of the Bitcoin when we were at 72K. Then I exited recently, I forgot the exact price, it was a bit over 60K when we went below the 120-day simple moving average. So I do trade Bitcoin quite massively with quite a lot of stakes according to those long-term cycles. That's the main alpha that I personally generate. I also do other strategies, right? I short altcoins that underperform Bitcoin, etc. But I ride those Bitcoin waves relatively well. And so far, historically speaking, I have bought massively low several times through several cycles, and I have also sold high. Not always the top, right? That I sold one day directly after the all-time high now was a bit lucky, but I did sell within the top 10% of the all-time high also last time. So I have a good track record at timing the markets, and it doesn't mean that it has to continue like this forever. but I do believe that I have a good grasp, at least, to say when Bitcoin is very cheap. It's hard to say when it's expensive, because it's hard to say when momentum runs out. The momentum can simply continue for a while, but it's easy to say when it's cheap, right? It's cheap when the average cost basis of the market is above the current price, because then people simply just tend to wait it out. They simply just tend to wait until Bitcoin recovers again, because Bitcoin is harder money compared to fiat. And so when you're currently in losses, you simply just keep on holding and wait it out, right? That's the safe approach. So that tends to happen when the market in general is in losses. It doesn't necessarily happen when the market is in profit, right? Then people tend to rather rebalance their portfolio and buy other things. So this is the main thing to look out for, right? When it's cheap, it's very easy to make a very strong bet. When it's expensive, it's not that easy to find the exit, especially because the market psychology as a whole is very bullish and you have to be very contrarian doing this. But riding the waves is, I believe, a very valid strategy. Some people simply just say you have to dollar cost average into Bitcoin forever and you have to ride those waves, you have to ride those ups and downs. But I think there is a way to time the market with proper analytics. And it does make sense to buy low and sell high and to not just dollar cost average in. It also very much depends on how much exposure you have to Bitcoin relative to your net worth, right? If you have also a lot of property and you have a lot of stocks and you have some long-term government bonds and some gold, and Bitcoin is just, say, an addition to your portfolio, then getting into those ups and downs and seeing a temporary drop of 60-70% in Bitcoin doesn't really matter to you, especially when this is just like, say, a 5% allocation to your portfolio. The ups and down movements also don't matter that much to you if you don't have yet a lot of wealth, right? If your overall net worth is only, say, 3 months of your income, and even if your Bitcoin portfolio goes down by 50%, it doesn't matter much, right? You just have to save a bit more for 2 or 3 months and you're already recovered. But if you've got, say, 2 or 3 years of net worth, and say half of your wealth is in Bitcoin, then a 50% drop does matter to you. And then I do believe timing the market is very useful. And timing the market to the upside is harder than timing the market to the downside. I can say for certain that we are not historically cheap in Bitcoin. So I can say for certain that there is room to fall, simply because people on average are now 2x in profit. The realized price is at 30K. But I cannot say for certain that the bull market is over, right? I can only see that the number of short-term holders isn't increasing right now. And in prior bull markets, it constantly increased. It never stopped increasing. So that's a potential problem, together, of course, with the 120-day simple moving average. And that's why I'm so cautious. I know it's a contrarian take, but that's how money is made, right? You have to be right when most people are wrong. I'm not saying that I'm right this time. I am saying that I was right on the Bitcoin cycle pretty often in the past. Not necessarily with every single altcoin, but for the Bitcoin cycle, I had been pretty good in the past. It doesn't mean that I will be good in the future, but it is where I currently put my money. I have exited Bitcoin as a whole. I've also exited all of my altcoin positions, and I am now shorting the altcoins. I'm betting on falling prices of the altcoins. I am actually regretting that I stopped shorting some altcoins during the bull market, because again, most altcoins underperform Bitcoin most of the time. Returns are pretty much concentrated in just a few players, and so it's actually possible to also short altcoins, the relative valuation of altcoins to Bitcoin in a bull market. It is a bit more dangerous, but it's also possible. And yeah, I wish I had kept some of those positions open even in the bull market, but it's fine. I also made some money with my levered Bitcoin bet during the bull run. So yeah, think about your general strategy. Think about how you see prices relative to their value, right? Have some kind of quantifiable metrics. Don't just go with gut feeling. Have some kind of a potentially back-tested strategy. This is what I personally do. I think it works pretty well. Don't just go with what people say on Twitter, because most people are wrong. So if you want to outperform the market, you have to have decisions that most people don't make sometimes, and that is buying when nobody wants to know about crypto, potentially even buying with leverage, and selling when everybody is hyped, right? This is how in the end you make money, by making the decision most people don't want to make. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. Helps the channel grow. See you also in our Telegram channel. There's a Telegram channel down below. Looking very much forward to seeing you there as well. Cheers.